assessment and audit. So this assessment is also connected to demand and recovery. Don't worry, today itself I will not complete entire GST. So segment 17, assessment and audit. In this assessment and audit, we need to see first what are the various interest provisions under GST. So this interest provisions under GST comes in different places, which I have just compiled into one place. Section 50 subsection 1, interest on account of delay in payment of tax, self-assessed liability. The rate of interest will be 18% per annum, and usually this interest will be computed from when? First date after due date till the date of payment of GST. Whereas section 50 subsection 3, wrong availment and utilization of ITC, and the rate of interest will be 18% when it will be computed from the first date after utilization till the date of payment of GST. When the ITC is considered to be utilized, the month in which the balance in ITC falls below the wrongly availed ITC, to that extent the ITC is considered to be utilized. So what does it mean? So say this, say for example I have wrongly availed ITC say for example month, opening balance and ITC availed, month opening balance, ITC availed, ITC utilized and closing balance. So for the month of say March, there is some opening balance which is a closing balance of February, that is 1 lakh is the opening balance, and ITC availed is 3 lakhs. In this 3 lakhs, so we have wrongly availed 1,25,000. So wrongly availed 1,25,000 as ITC. Then ITC utilized is somewhere like 2,50,000. 2,50,000 is ITC utilized. So what is the closing balance? 3 plus 1 4, 4 minus 2.5, that is 1,50,000. Whether I have wrongly availed ITC been utilized? No, because what is the wrongly availed ITC? 1,25,000. What is the balance in ITC? 1,50,000. Means I have not at all utilized, means I maintain the balance in ITC. See, LIFO, FIFO, weighted average and all we cannot apply here, because all these are amounts. For that reason only they are telling just check the balance. If the balance in ITC is sufficient, which means we have not utilized, got it? Then again, for the month of say April, the opening balance is 1,50,000 and ITC availed is 2 lakhs and ITC utilized is 1 lakh. So what is the closing balance? 2,50,000. Whether again we have utilized? No, we have not utilized. For the month of May, 2,50,000 is the opening balance and 1 lakh is the ITC availed, and what we have utilized is 3 lakhs and the closing balance is 50,000. Now this particular month we need to check what happened. The balance came down to 50,000. So wrongly availed ITC 1,25,000. The balance in ITC is 50,000, which means we have utilized 75,000 in the month of May. So out of this wrongly availed ITC, for the month of May, how much we have utilized? 75,000 utilized. Why 75,000 utilized? Because the balance in ITC falls below the wrongly availed ITC. So 75,000 got utilized in the month of May. And again, say like this it continued, and June month opening balance 50,000 and ITC availed 4 lakhs and ITC utilized is 1 lakh and the closing balance is 3,50,000. So when the balance increases, does it mean we have reversed the ITC? No, it does not mean the ITC is reversed. So only when the balance is reduced, the ITC is utilized. When the balance increases, that does not mean ITC is reversed. And again, for the month of July, opening balance 3,50,000 and ITC availed will be say 50,000. ITC utilized is 3,75,000 and again the closing balance will be 25,000. Whether we have utilized the ITC? Yes, we have utilized the ITC. To what extent the ITC is utilized? To what extent the ITC is utilized? So already from 1,25,000 it came down to 50, means 75,000 utilized. Again it came down to 25,000. So therefore 25,000 utilized. 25,000 utilized. And then what we did, this wrongly availed ITC, wrongly availed ITC is reversed. Wrongly availed ITC is reversed in August. Wrongly availed ITC is reversed in August month. Now we need to compute interest. We need to compute interest for two amounts. One is 75,000, another is 25,000, not on entire 1,25,000, because only ITC utilized is 75,000 and 25,000. So therefore first interest computation, interest on what? 75,000. Okay, at what rate? 18%. From which date to which date? So what is the month in which we have utilized? May month. May month we have utilized, means for May month when we will file 3B, 20th of June. So therefore we need to count from 20th of June till the date of reversal. What is the month in which it is reversed? August month. For August month when you will file 3B, 20th of September. So till 20th of September we need to count the interest, that is for how many days? Don't count 20th June, count from 21st June, which means in June it will be 10 days, July 31 days, August 31 days, September 20 days, that is for 92 days we need to compute the interest. So 75,000 into 18% into 92 divided by 365. So 75,000 into 18% into 92 by 365, that comes to 3,403 rounded off. Why can't we take 366? See, remember, it's not about the financial year. It is about, in the numerator, if you have February computation, means say January to March you are taking the period. So then in numerator we have 29 days. So in denominator it should be 366 days. In the numerator, say 2024 only, July to September, that where you are counting, in that there is no possibility of 29 days. That's why denominator will not be 366, it will be 365. Remember, only in numerator you take February 29, in the denominator it should be 366. Otherwise it will be 365 only. So 3,403. And next one, next interest. Interest on what? Interest on 25,000. At what rate? At 18%. From which date? From utilization. When is it utilized? July month. July month is it is utilized. For July month, so what is the due date? 20th of August. 20th August till 20th of September. That is how many days? In August 11 days, September 20 days, that is 31 days. For this 31 days, we need to compute interest. So 25,000 into 18% into 31 by 365. So 25,000 into 18% into 31 by 365, that comes to 382. This will be the interest. So this is how the interest needs to be computed in case of wrong availment and utilization of ITC. That is this part. So wrong availment and utilization of ITC, 18% per annum. Then section 60. So this is related to provisional assessment, and related to this 50 subsection 3 itself, still there is some more discussion which is in payment process. You can see that information little bit in full. So you go back to payment process chapter. In this payment process chapter, we have interest computation. You see that in page number 139, interest on delayed payment of tax. There are three situations where this interest computation will come under section 50. Situation 1, delay in filing 3B. So there is a delay in filing GSTR 3B, then also interest will come, and invoice not reported in GSTR 1 and GSTR 3B of a month but paid in the another month. What does it mean? For a particular month, I have some liability, I have not reported that liability and I have evaded it. That amount I am paying in some subsequent month. Then situation 3, ITC wrongly availed and wrongly utilized. So look into situation 1, there is a delay in filing 3B, and in this case the interest will be at the rate of 18% from the first date after due date till the date of payment, actual date of payment. Okay, so for that period we need to compute interest on what? Is it on the gross liability or on the net liability? On the net liability. In case of delay in filing 3B, interest is always computed on net liability. For example, my gross liability is 7 lakhs and ITC is 3 lakhs. So 7 minus 3, 4 lakhs. On 4 lakhs only interest will be computed. So that amount which is paid through cash ledger. Whether RCM liability also will be taken in this? Of course yes, because RCM liability also will be paid through cash ledger. So that is also taken in net liability. Then from which date to which date? From the first date after due date till the actual date of payment. What is considered as the date of payment? Date of payment will be actual date of filing GSTR 3B or the date on which you are paying through DRC 3. So that should be taken, but here DRC 3 point will not come, because first of all this is what situation? Delay in filing 3B. So due to that reason. And will there be a late fee payable? Of course late fee is also payable along with interest, but right now we are talking about the interest. Then situation 2, invoice not reported in GSTR 1 and GSTR 3B in a month but paid in the another month. In this case interest will be computed on gross liability. Say for example, July 2022 I have to pay one tax which I have not paid, and I paid in July 2024. After 2 years I am paying. When after 2 years I am paying, so I may pay through credit ledger as well as cash ledger. That is okay. I can pay arrears of tax also through credit ledger, no issue at all. But interest will be computed on gross amount. So whatever is the amount that I need to pay. So compute on the amount paid through electronic cash ledger and electronic credit ledger, that is gross liability, and interest will be computed from the first date after due date till the actual date of payment. What is the actual date of payment? Here either I can pay through DRC 3 or I can pay through GSTR 3B. Then this just now we discussed situation 3, that is ITC wrongly availed and wrongly utilized. Interest will be at the rate of 18% from the first date after utilization of ITC till the date of reversal or payment, and it is computed on ITC utilized. What is the meaning of ITC utilized? The extent to which balance in ITC falls below the availed ITC. And what is considered as the date of utilization? Date of utilization, I told you, first you need to see the month in which the balance in ITC falls below wrongly availed ITC. For that month, whatever is the due date of 3B or actual date of 3B, whichever is earlier will be taken as the date of utilization, and we need to pay till the month of reversal. Okay, so date of utilization is actual date of 3B or due date of 3B, whichever is earlier, with respect to the month in which balance in ITC falls below wrongly availed ITC. What is considered as the date of reversal? Either actual date of 3B, even can we do the reversal through DRC 3? Yes, you write there, date of reversal is actual date of GSTR 3B or DRC 3. And there is one amendment with this regard, that is, if you maintain sufficient balance in the cash ledger by the due date of GSTR 3B, interest is not payable on account of delay in filing GSTR 3B. So this is a newly added point. So they have added one proviso where they are telling previously and all, when you file 3B late, so even if you have maintained sufficient balance in the cash ledger, you need to pay interest on the net liability. But now they are telling, as on the due date of 3B, if you have maintained sufficient balance, then interest shall not arise on that amount even if there is a delay in filing 3B. Okay, so for that purpose I have given one question, so have a look into this question. Say this, question number 24. Question number 24, you can see if you have solved workbook, due date of filing GSTR 3B is 20th of next month. Month is July 2024. My gross liability is 8 lakhs, ITC availed is 3 lakhs, and what is the net liability? 8 minus 3, 5 lakhs. I maintained that 5 lakhs as on the due date. For July, what is the due date of 3B? 20th of August. So as on 20th August, I maintained 5 lakhs in my cash ledger. Again, August 2024, my gross liability is 4 lakhs, ITC is 1 lakh. So 4 minus 1, 3 lakhs. 3 lakhs I have to maintain, but what is a mistake I did? I deposited only 2 lakhs. How 2 lakhs? Already 5, now it is 7. Means 2 lakhs I have deposited as on 20th September, and thereafter 1 lakh I deposited by 30th September. Then again, September 2024, gross liability is 6 lakhs, ITC availed is 4 lakhs. So the difference is 2 lakhs. So that I maintained by 20th of October, because for September 2024 GSTR 3B is due date is 20th of October, so I deposited. Now what I did, for all these 3 months, GSTR 3B for all the above months is filed on 28/12/2024. So correct that, 28/12/2024. Now compute the applicable interest that is payable. Now, so what is the interest payable? First we will see for July month. July month, what is the net liability? 5 lakhs. Whether that 5 lakhs I am making payment, like I have maintained as on the due date of 3B, yes, I am maintaining the balance as on 3B due date, so no need to pay interest, because the net liability 5 lakhs, due date of July is 20th August, I maintained that, so I don't have to pay interest. Is that clear? Then go to August month. August month, what is the net liability? 3 lakhs. 3 lakhs. Whether in that 3 lakhs I maintain 3 lakhs as on the due date of 3B? No, only 2 lakhs I have maintained, 1 lakh I have not maintained as on the due date of 3B. So on 1 lakh we need to pay interest. At what rate? At the rate of 18%. From which date to which date? You see the question and tell me, from which date to which date? 20th September to? Wrong answer. 30th September should not be taken. See, this proviso says if you maintain sufficient balance, in the due date of 3B, then interest not payable on account of delay in filing 3B. Otherwise, this provision will not come. If this provision is not coming, then section 50 will come. For delay in filing 3B, you need to compute interest from which date to which date? From the due date till the actual date of payment. What is the actual date of payment? Actual date of filing 3B. What is the actual date of filing 3B? 28 December 2024. Not for this 10 days. One simple mistake they have done. What is that? Rather than putting on 20th September, they have deposited on 30th September, because of which they will end up paying interest from 20th September till the date they are actually filing 3B. Is it clear? So 28 December. So count the number of days. In September 10 days, October 31 days, November 30 days, December 28 days. For 99 days they need to pay interest on 1 lakh. Are you understanding this? So see there, interest not applicable on 2 lakhs deposited by 29. However, interest is applicable on 1 lakh. Because see, this provision not applicable for 1 lakh. If this provision not applicable for 1 lakh, the regular provision will be there. Got it? So not interest is payable on 1 lakh deposited after the due date. Interest computed from the due date till the date of payment, that is date of filing 3B. Because date of payment of tax is the date of filing 3B only. And interest payable will be 1 lakh into 18% into 99 by 365. Where is it given? The date of payment is date of filing 3B. Clearly I have given. Date of payment will be taken as actual date of filing 3B because of that reason. Whereas for September month, if you see 6 lakhs minus 4 lakhs, how much? 2 lakhs. Whether the 2 lakhs is maintained as on due date? Yes. So whether any interest is payable in this case? No. Interest is not applicable as 2 lakhs is deposited by 20th of October 2024. Good question, no? So this can be tested in exam because of the amendment, this point of amendment. Then one more question I just wanted to give you here in this regard. So payment process chapter itself you can take in solve workbook. So there is one question, slightly I modified that question. this question. Question number 3, which is in page number 328. Miss Nitya has following balances in her electronic cash ledger as on 28 February as per GST portal. So, CGST, SGST, IGST, this is the balance in the cash ledger as on 28 February. Her tax liability for the month of February for CGST, SGST was 75,000 each. She failed to pay the tax and contacted you as legal advisor on 12th April to advise her as to how much amount of tax or interest she is required to pay, if any, by utilizing the available balance to the maximum extent possible as per GST law. She wants to pay tax on 20th April. This is which month? February month liability. For February month, what is the due date? March. So, date of collection of GST 18 February, no other transaction after this up to 20th April. So, 20th March is the due date. So, but when it is being paid? 20th April. As on 20th March, if sufficient balance is there in the cash ledger, we don't have to compute interest, correct or not? Now, 75,000 is the CGST, SGST liability. Now, go to CGST head. Whether CGST head tax, they have 75,000 as on 20th of March. By 20th of March, no. So, CGST only 40,000 is there. What is the balance not there? 35,000 is the shortfall. Agreed pa? 35,000 shortfall. 35,000 shortfall. And next, go to SGST head. Go to SGST head, how much? 80,000. So, sufficient balance is there? Yes. Which means on this SGST, interest will not arise. Why interest will not arise on SGST? Because there is sufficient balance as on the due date of GSTR 3B. So, interest will not arise. Okay. Now, sir, for CGST, 40,000 is there, but you go to IGST. IGST head, how much is there? 45,000. Can we use that 45,000 for payment of this 35,000? Yes. Because in cash ledger, there is no restriction on cross utilization. Any head can be utilized for payment of any head. If that be the case, then 45,000 can also be used for payment of 35,000. Means they have maintained the sufficient balance. So, therefore, on the 35,000 also no need to pay interest. Wrong answer. Wrong answer. Because they have not specified that it should be headwise or total balance. They have not specified headwise or total balance. Got it? So, right there, headwise or total balance not specified. Then what is the interpretation in that case? You take the interpretation as headwise strictly, because that much of balance should be maintained in terms of section 49 subsection 10, like that it is given, which means that headwise only should be taken. Got it? That is the assumption. So, in exam, suppose if at all you get this question, as there is no clarity, ambiguity is there, you need to write the assumption. Of course, they will not go this much deep because they are not a psycho like me. Got it? So, they will not think of all these things, but suppose in case if they are giving, you write the assumption. What is that assumption? That headwise the balance should be maintained. As there is no balance headwise, the interest will be payable on 35,000. That is the assumption I have taken in this case. That's why I computed interest on 35,000. Is it clear here? 35,000. In the given case, since Miss Nitya wants to pay tax on 20th April, interest payable on amount of CGST 35,000 into 18%. And I gave the explanation also. As per section 49 subsection 10, any amount of tax, interest, penalty fee or any other amount available in the cash ledger under CGST Act can be transferred to such cash ledger for integrated tax. Okay. Thus, amount entered under any minor head and major head, so can be cross utilized. So, why we are taking this particular assumption here? So, because that is after that is, see, balance we can transfer. Balance we can transfer and then we can utilize. So not that directly we can utilize. So using PMT 9, we can shift the balance for 45,000 to this, and then we can use it for payment of tax. But that particular point is for transfer of balances, etc. and all. So means we should maintain the headwise that much of balance. So that is the view which I have taken. Maybe if they come out with a clarification, so that I will update for November 25 exam, got it? But right now this is the answer to be followed for exam. So 35,000 into 18% into 31 by 365. Hope you got the clarity about this. Then next one, how to check the balance in ITC while computing interest under 50 subsection 3 for wrong availment and utilization of ITC. That is, sir, headwise should we see the balance again or total we need to take? So look into this question. That is, say this, IGST wrongly availed, IGST wrongly availed is 1,50,000. IGST wrongly availed is 1,50,000 for March 2024 and reversed in September 2024. IGST wrongly availed 1,50,000 for March 2024 and reversed in September 2024. Starting from March, we have the balance in ITC. So balance in ITC, if you see for CGST, then SGST and IGST. So we have the balances, and we also need to check the total with respect to this total, okay? And here the balance in ITC for the month of March, April, May, June, let's take July, we are reversing, July 2024 we are reversing. So March, April, May and June, CGST if you see 40,000, SGST 40,000 and IGST is somewhere like 1 lakh, okay, and the total will be 1,80,000. Whereas April CGST 50,000, SGST 50,000 and IGST is somewhere like 80,000, okay. So still 1,80,000 is maintained. May month 60,000, 60,000 and 40,000, so 1,60,000, and June month that is 75,000, 75,000 and 0, there is no balance, so 1,50,000. Now tell me whether we have utilized the IGST credit or not utilized the IGST credit. So if you observe here, so IGST column alone you see 1,50,000 came down to 1 lakh, means 50,000 utilized, then it came down to 80, 20,000 utilized, then it came down to 40, 40,000 utilized, then it came down to 0, means fully it has been utilized. But we should not see the IGST head alone. IGST credit we need to see all the heads, the balance in total. The balance in total is what? 1,80,000, 1,80,000, 1,60,000, 1,50,000. So therefore you need to see the total balance, all the heads we need to see as the total ITC, as the total ITC balance, okay, is greater than or equals to 1,50,000 in all months, Therefore interest is payable or interest is not payable? Interest is not payable. Is it clear here? So while doing the computation, whether we need to see the total or only the headwise total we need to see for computing the interest. You see this IGST credit wrongly availed. When IGST credit wrongly availed, check the balance in ITC of CGST, SGST and IGST. So therefore we will check the balance of all the heads. We will check the balance of all the heads here for the purpose of understanding, that is total we need to take. Then you tell me, suppose if CGST credit is wrongly availed, then what we need to see? CGST and IGST. Why? Because CGST credit can be utilized for payment of CGST and IGST na. That's why we need to see CGST and IGST head ka balance. When SGST credit is wrongly availed, then SGST and IGST. And what if compensation cess is wrongly availed? Then in that case we need to see only compensation cess. We need to see only compensation cess, because compensation cess can be utilized only for payment of compensation cess for that reason. Okay, so that's what I have given. If IGST credit wrongly availed, we need to see the balance of IGST total and all the credits. CGST wrongly availed, check the balance of CGST IGST. SGST credit wrongly availed, check the balance of SGST IGST. Compensation cess wrongly availed, check the balance of compensation cess. What if both CGST and SGST wrongly availed? See the total. See the total. Okay, if both CGST, right there, both CGST and SGST, both CGST and SGST wrongly availed, both CGST and SGST wrongly availed, then check total balance, total balance of CGST plus SGST plus IGST. Got it? When both are wrongly availed, just like IGST wrongly availed, when both CGST and SGST wrongly availed, check the total balance, all the three heads. Done here? So this is about the interest computation and some special aspects related to that. Okay, so last class we completed the discussion related to this interest under section 50 subsection 3, wrong availment and utilization of ITC. So now we are moving on to the other aspects. So we are right now into assessment and audit under GST. So kindly look into page number 174. Page number 174. And in this, so first I told you section 50 subsection 1 interest, that is interest on account of self-assessed liability for delay in filing 3B, etc. These things we have seen. Section 60 interest will come into picture in case of provisional assessment. So just like in customs, whenever a person is unable to compute, that is a taxable person or a registered person is unable to compute their tax liability, they can make an application for provisional assessment and the officer will compute how much is the tax that the person needs to pay. That is called as provisional assessment, and upon finalization of assessment the differential tax will be payable. So that particular differential tax, while paying we have to pay interest. This is 18% per annum. In customs it is 15% per annum. In customs it is first day of the month in which provisional assessment is resorted, but here it is first day after due date till the date of payment. So first day after due date of the month in which tax is provisionally assessed till the date of payment of GST. Whereas section 16 is there, which says that if the recipient is not making payment to supplier within 180 days from the date of invoice, so much of the ITC availed by the recipient needs to be reversed along with interest at the rate of 18% per annum. And that interest always, in case of wrong availment of ITC, interest needs to be computed from the date of utilization till the date of reversal. So first day after utilization till the date of reversal. Then rule 42 also there is a interest, that is we need to reverse the proportionate ITC attributable to exempted supplies and proportionate ITC attributable to non-business purpose, and that again we need to compute at the end of the year. So monthly also we need to do the reversal, that is called as provisional reversal. At the end of the year also we need to do finally, and whatever we have already reversed is say less than what we need to reverse, the differential amount we need to pay along with interest at the rate of 18% per annum. From when we need to pay? From 1st April of the succeeding financial year till the date of payment. So month on month we need to compute D1 and D2. What is D1 and D2? D1 is inward supplies, that is ITC attributable to exempted supplies. How to calculate D1? So that is common credit C2 into exempted turnover divided by total turnover. So you will get the proportionate ITC attributable to exempted supply, and a proportionate ITC attributable to non-business purpose is 5%. So that we need to do month on month and again compare at the end of the year, that is this. Then in case of rule 43, rule 43 is in case of capital goods, which is commonly used for both taxable and exempted supplies. First we need to avail the ITC on capital goods, thereafter we need to reverse the ITC on capital goods over a period of 60 months. So how much we need to reverse? Monthly ITC, that is total ITC on capital goods divided by 60 months into exempted turnover of that month divided by total turnover of that month, that we need to reverse, and along with that we need to pay interest also at the rate of 18%, but in this case it is not from the date of utilization, it will be from the date of availment till the date of addition of proportionate ITC to the output tax liability. Then section 56, this is refund interest. Whenever we are getting the refund, we need to make application for refund. Once we make application for refund within 60 days, they need to grant the refund. If they are not granting refund within 60 days, from 61st day, interest will be payable at the rate of 6% per annum till the date of refund. Suppose if the refund is arising on account of any order of the adjudicating authority or appellate authority, then the interest rate will be 9% per annum and it will be computed same from 61st day from the date of application till the date of refund. That's the reason why we took in case of pre-deposit 9%, because that refund is arising on account of appellate authority. So 9% per annum should be taken for pre-deposit, and the pre-deposit interest, the 60 days is not applicable. It will be from the date of pre-deposit till the date of grant of refund of pre-deposit. And here they are telling first date after due date, due date. So what is the due date? Due date will be due date of filing 3B. What is the due date of filing 3B? Usually 20th of the month following every month. And if there is any delay in filing 3B, interest is payable on net liability, provided the liability is reported in 3B, otherwise interest is on gross liability. Then look into this assessment under GST. Total we have 5 types of assessment. Self-assessment, that is where the taxpayer can compute how much tax he need to pay, that is known as self-assessment. Provisional assessment, where he is unable to compute, then he will make an application, that is provisional assessment. Then scrutiny assessment, whenever he files the self-assessment return, that will be taken up for scrutiny by the GST department and they will verify, and they will be giving any notice in case of discrepancy, that is known as scrutiny assessment. And then we have best judgment assessment. In 2 places we will come across best judgment assessment. One is best judgment assessment on account of non-filing of returns, that is section 62. Then best judgment assessment with respect to unregistered person. There is an unregistered person who is liable to pay GST, but he has not paid GST. So why he is liable to pay GST means he made a suppression of turnover. So then it will be section 63. Then summary assessment will be section 64. The summary assessment is like income escaping assessment in income tax, the same logic, that is summary assessment under section 64. Now let's try to understand one by one. So self-assessment is section 59, and what is the status of the person? Registered person. So what this registered person will do? He will only compute how much tax he need to pay and file it in the returns. So it will be done by registered person. Notice not applicable. Situation, every registered person has to assess the tax payable and furnish the return. What is the time limit? Due date of return, that is usually due date of 3B, that is 20th of next month. And officer to take permission not applicable, withdrawal of order not applicable, there is no consequences. Whereas if you see provisional assessment is section 60. So in that, status of the person is a taxable person, means even a person who is not registered also can go for provisional assessment. So who is not registered but liable to get registered. Okay, so taxable person means registered person or a person liable to get registered. And who will do this provisional assessment? Definitely it will be done by the proper officer. Notice there is no question of this because we are only making application for provisional assessment. What is the situation where the taxable person is unable to determine the value of goods or service, or both, or determine the rate? Unable to determine the value or unable to determine the rate, then they will be going for provisional assessment. What is the time limit? Provisional assessment order should be passed within 90 days from the date of receipt of such request. Means whenever we make application for provisional assessment, within 90 days they need to pass the provisional assessment order, and thereafter final assessment order they need to pass after provisional assessment order. That will be 6 months plus 6 months plus 4 years. This 90 days again we have come across in 3 places so far. Point number 1, In case of compounding, so we need to make application for compounding, and within 90 days they will be giving the compounding order. Then again advance ruling also, once we make application for advance ruling, they will pronounce the ruling within 90 days. Even appellate authority also pronounce the ruling within 90 days from the date we make appeal to appellate authority for advance ruling. And here again provisional assessment order also within 90 days from the date we make the application. Thereafter they will pass the final assessment order within 6 months. It can be extended for a further period of 6 months and plus 4 years. And from the provisional assessment order they can pass the final assessment order. So ample time is there, but in customs we don't have that much time. So there it will be 2 months. If the documents are submitted, 2 months from the date of submission of documents. If not submitted, 2 months on expiry of submission of documents, plus it can be extended for a further period of 3 months. So 2 months plus 3 months, like that it is there in customs. But here 6 months plus 6 months plus 4 years from provisional assessment order. So whenever you are reading, you need to connect this and read, because no, even not only this, income tax also when you are reading, so what is a provision in GST, that you need to refer. So little bit we will be lazy to refer. So our mind will tell it's okay, just read this, like that it will tell. No, don't do that. So you open another book, it will take little bit of effort. Okay, you have to get up and find another book and turn the pages. So that much of effort only you can put, because what will happen is that when you are trying to compare this, you will never forget. That is one advantage. Second advantage is it will definitely help in IBS exam. So in IBS exam also you will not make the mistake, because in IBS exam what they are doing is that in MCQs they are merging 2-3 provisions, like DT provision and IDT provision, they are merging and asking. For example, last attempt they have given one question on TDS, that is income tax TDS is also there, GST TDS is also there. Merging those two, they have created one MCQ. So for that purpose, so while preparing itself, if you are able to connect this and prepare, it will be helpful for you. Okay, then coming back to this, officer to take permission, no. So withdrawal of order, not applicable. Consequences, what will happen upon final assessment? So 3 possibilities could happen when the final assessment amount is less than provisional assessment amount. So which means that we have to pay the differential amount, and that differential amount will be at the rate of 18%. In customs it will be 15%. And from which date to which date? From the due date till the actual date. There from the first date of the month in which provisional assessment is made till the date of payment of differential amount, that is this. Then pay the difference at 18% from the first date after due date till the date of payment. What if it is negative? Negative means what? Whatever final assessment amount is less than the provisional assessment amount, means we have paid the excess, that we will get as a refund. And for that we need to make application. Once we make application, within 60 days if they are not granting, only from 61st day they will be giving interest at the rate of 6% per annum. But in customs it's not like that. 3 months. Here it is 60 days, there it is 3 months. And there the 3 months will be from the final assessment. As soon as final assessment is made, from there 3 months, if not they will compute interest. Application and all not there. For application plus 3 months is not there. Only provisional assessment gets finalized, from the date 3 months. Here final assessment plus 60 days, if they are not giving, then only interest will be payable from 61st day till the date of refund. Then next we have scrutiny assessment. Section 61, what will happen? Scrutiny assessment. So as per section 61 in scrutiny assessment, so status of the person, registered person, and it will be by the proper officer, and notice, yes, a notice will be given. So what will happen? Usually whatever returns that we are filing, those returns will be taken up for scrutiny by the officer, and those returns they will scrutinize. If there is any discrepancy, they will be communicating the discrepancy. For that communication of discrepancy only they will be giving this notice. So this will be done by the proper officer and registered person, because self-assessment is connected to scrutiny assessment. And situation, in order to verify the correctness of the return, the proper officer may examine the return and seek the explanations. Time limit they have not given, but logically it should be within the time limit under 73-74, because if they are giving this notice beyond that time limit, how they will be able to recover? Because there is a maximum time limit for passing the order under 73-74, that is 3 years from the due date of filing annual return and 5 years from the due date of filing annual return. By the time only they can pass the order, na? So even though they have not given, but logically it should be before the order under section 73-74. Officer to take any permission, no. And withdrawal of order, not applicable. What is the consequences? If the explanation is not obtained within 30 days or extended period. So first they will give a notice, that is intimation or communication of discrepancy. Within 30 days we need to respond. If not responded within 30 days or the extended period, or registered person fails to take corrective measures, then what proper officer will do? Proper officer may conduct audit, that is departmental audit, or may order for special audit, or initiate any recovery. If the officer is having solid evidence about the tax non-payment etc., they will initiate recovery by passing order under 73 or 74, or conduct inspection. Which inspection? Inspection under section 67, inspection with respect to the premises. Okay, so you can write there initiate, that is conduct audit. Audit, which section audit? Audit under section 65 or 66. 65 audit is departmental audit, 66 audit is special audit. Or initiate recovery, that recovery will be under section 73 or 74. If it is other than fraud, 73. If it is on account of fraud, then it will be 74. And conduct inspection, that inspection will be in terms of section 67. So inspection in the premises, okay, they can resort to any of these things, either audit, initiate recovery, or inspection. Then next we have best judgment assessment. Best judgment assessment. Sir, I request you to switch off ads. Long back we switched off ads. Yes, in our channel we have not monetized, we have switched off. Okay, so mainly because of students only. I was getting good YouTube revenue. So amazingly, per month I used to get 40 to 50,000 rupees as YouTube revenue, and I lost it because of you guys only, idiots. Okay, and so still again you are asking switch off the ads. So I switched off. Long back I have switched off. I am not getting any revenue also out of that. Then, so timing of lecture 9 or 9:30 a.m. 9:30 only, yaar. Every day it is starting at 9:30. Maybe you start at 9 o'clock today. Okay, no issue, you can revise, you have time to revise. And 9:30 to 6:30 daily I am taking like that only. Fine, coming back to this. So best judgment, but of course I am not regretting, it's okay. 50,000 before you, 50,000 and all is small only. Okay, because no, you are important. 50,000 I can earn any time, but you are important, correct? No, so for that reason. And best judgment assessment, section 62, that is non-filers of return. Whenever a person is not filing the return, so then officer will give a notice under GSTR 3A, and that notice under GSTR 3A will be given, and within 15 days from that notice. So usually we need to file return, just like income tax only. We need to file returns. We are not filing returns, they will give a notice. In pursuance of notice, we need to file the return within 15 days. Otherwise, they will initiate best judgment assessment under section 62. Status of the person, registered person. Who will assess? Proper officer will assess. Opportunity of being heard, yes. And GSTR 3A is the notice, not a separate notice here, but it is a notice under GSTR 3A. Situation where a registered person failed to furnish the return within 15 days from GSTR 3A notice. I told you already. And then what is the time limit within which this best judgment assessment order should be completed? Within 5 years from the date of 31st December of the financial year for furnishing of the annual return to which the tax not paid relates to, which means that we need to see the financial year, say financial year 25-26. For financial year 25-26, due date of annual return is 31st December 2026. From there within 5 years, just like 74 time limit. 74 also 5 years na, from the due date of annual return. Same logic here also. Officer to take permission? No need to take any prior permission. Withdrawal of order? Yes. What is the reason why they are going for best judgment assessment? Because we are not filing the returns. What if we file the returns and they will withdraw the best judgment assessment order? But what is the time limit within which we need to file the return? After best judgment assessment order, within 60 days we need to file the return. So then they will withdraw the best judgment assessment order, and as per returns, whatever is your tax liability, you need to pay the tax liability. What if the 60 days is over? That is, best judgment assessment order is given, 60 days is over, I could not file the return. Can there be an extension? Yes, definitely there is an extension that is possible for a further period of 60 days. For that, what is the late fee that we need to pay? 100 rupees. But after 60 days, we need to pay 100 rupees. Subject to maximum, there is nothing like that called subject to maximum. 100 rupees per day, that's it. Okay, see this. So where a registered person furnishes a valid return within 60 days of ASMT 13. ASMT 13 is assessment order, best judgment assessment order, and plus 60 days with a late fee of 100 rupees per day, shall be deemed to be withdrawn however interest will be payable. So once we file the return along with this late fee, so definitely they will withdraw the order. But this particular late fee, there are two types of late fees. The regular late fee is there for delay in filing return. Already I am filing late. There is a regular late fee under section 47 for delay in filing return. That late fee also will come, and this late fee also will come if it is beyond 60 days. So for the first 60 days, we have only regular late fee. I gave the chart in the next page, you can see. Late fee for filing returns after best judgment assessment order under section 62. So due date of GSTR 3B, and if 3B is filed after due date but before best judgment assessment order, after due date before best judgment assessment order, we need to pay a normal late fee. What is a normal late fee? 25 rupees per day subject to maximum. That maximum differs. So that maximum will be, we have 1000 and 2500 and 5000. If my aggregate turnover during the previous year exceeds 5 crores, then it will be 5000. If my aggregate turnover during the previous year exceeds 1.5 crores but does not exceed 5 crores, half, that is 2500. If my aggregate turnover during the previous year does not exceed 1.5 crores, then it will be half, that is 1250, ignore 250,000. Okay, so this will be, so 5000, 2500 and 1000. This will be the maximum late fee depending upon my aggregate turnover. This is under CGST Act. The equal late fee will be payable under SGST Act also. So that is the normal late fee we need to pay. After best judgment assessment order, within 60 days from best judgment assessment order, if I pay also, same. The normal late fee, that is 25 rupees per day subject to maximum 1000, 2500 and 5000 under CGST Act, SGST Act. Okay. If GSTR 3B is filed within 60 days. Thereafter if I pay, that is after 60 days from best judgment assessment order, if I file GSTR 3B, then what will happen? For normal late fee also will be there. Normal late fee also will be there, plus additional late fee also will be there from 61st day. So that is 100 rupees per day. There is no maximum there, 100 rupees per day. But this 100 rupees per day is for a period beyond 60 days. Okay, that is additional late fee. This is also under CGST Act and SGST Act. Definitely in MCQ they can convert, like merge these two, and they can ask, be careful, normal late fee also applicable and this additional late fee also applicable if it is beyond 60 days. That is about this best judgment assessment, where the registered person furnishes a valid return within 60 days plus 60 days. Then look into another best judgment assessment, that is section 63. This best judgment assessment is with respect to unregistered person who is liable to pay GST. There is an unregistered person, but he suppressed the turnover, he is not got registered and he did not pay any GST. Then in that case, so the proper officer will compute the tax payable. And opportunity of being heard, of course, yes, notice will definitely be given. And situation where a taxable person failed to obtain registration even though liable to do so, or whose registration has been cancelled but still he is having some liability to pay. What is that liability that he need to pay? He need to pay the ITC with respect to inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, and even on capital goods. ITC divided by 60 months into balance life. So whenever we cancel our registration, we need to reverse the ITC on closing stock. So that we need to pay. Suppose if the person has not made the payment, then they can use this best judgment assessment, that is this. And what is the time limit? Same time limit, 5 years. 5 years from the due date of filing annual return for the respective financial year. Officer to take permission? No. Withdrawal of order? No. Here there is no withdrawal of order. We need to pay as per the best judgment assessment order. If you don't want to pay as per best judgment assessment order, go for appeal. So pay as per the assessment order or prefer an appeal if not satisfied with the assessment order. Then next one, section 64, summary assessment. Summary assessment will come into picture whenever the officer identifies some goods which are evaded and delay in passing assessment order, that person may escape from payment of tax. In that case, what they will do? Summary assessment they will do. And in case of summary assessment, no notice will be given. This summary assessment implication we have come across in two places. So one is in case of section 67, search will happen. Whenever the search happens, so what they will do is that, so they will do the seizure, and after seizure already one notice is given there. So what is that notice? For the purpose of paying the tax. So that's the reason why that is actually a summary assessment, wherein they are assessing and they are passing, immediately seizing the goods and asking you to pay. So again, even in case of section 68, that is situation 2, also we are seeing a kind of summary assessment. What happens is that when the vehicle is stopped and intercepted, they seize the goods and they seize the vehicle and they are asking us to make the payment. So that is what summary assessment kind of is. So whenever there is a delay in passing assessment order, the person may escape from payment of tax. They will invoke this power, that is summary assessment. But usually summary assessment, rarely they will be invoking, because already we have that particular coverage. If they want to use this power, they can definitely use. This is one power which they have just kept it with them. So sparingly it will be used. Like how all history warriors and all are there, na, this Mahabharata, wherein one Brahmastra will be common with everyone, but no one will use, because if they use entirely it will be over. So with just one Brahmastra, entire war they would have ended, but they did not end like that. So summary assessment is like this, completely killed. Okay, so status of a person, no notice, that is important. And section 64, status of the person, taxable person. Who will do this assessment? Proper officer will do the assessment. Situation, the proper officer has evidence that a taxable person has incurred a liability. Proper officer has evidence that the taxable person has incurred a liability, and proper officer has sufficient grounds to believe that delay in passing an assessment order may adversely affect the interest of revenue. In that case, they will pass the summary assessment order. And any time limit? No, they have not given the time limit. Officer to take any prior permission? Yes, they need to take the prior permission of additional joint commissioner, because they are going against the principles of natural justice. Without giving an opportunity of being heard, they are passing the assessment order for that reason. Withdrawal of order? Yes. When it will be withdrawal of order? If the officer is of the opinion that no, he don't want to levy, he can withdraw, or upon request by the taxpayer, sir, I will follow the regular assessment process like 73, 74 itself, please withdraw this order, like that. When the request is made, thereafter officer can withdraw. So pay as per the assessment order, or if the order is erroneous, proper officer may withdraw such order and follow the procedure laid down in 73, 74. So that is about assessment under GST. Then look into audit under GST. And yesterday while discussing, I told you compounding fee is 25% to like 100%. But in the 25 to 100, that is the general compounding fee. But in one question actually, so it's a old past exam question in the solved workbook, it is given as some 50% to 150% like that. So you need to correct it. It is 25% to 100%. That is that. And there are some mistakes. Really, I'm extremely sorry, because how much ever I can incorporate, but because of the amendments and all, so some errors have come up. So that's the reason why I have just created one forum. So idtvisa.com like that, and in this forum, so whatever queries that you have, you can post it. So a lot of students are posting their queries and I am responding to those queries also, plus some frequently asked questions, like say for example some good questions are there which a student has asked. For the benefit of other students also, I have created this, like GST for students. So chapter wise I have created, and this month, so after this batches and all get over, April month and May month I am fully free only. I don't have any other classes. I am all yours. So therefore I will be updating whatever queries that I am getting, I will update here. And even so, these mistakes whatever I identify also, so based on the students, even I am also noting down. So this correndum to solved workbook I have given. So this you please check, no need to check regularly. So just one day you sit and you incorporate all these changes, small changes only it is there. So therefore you can incorporate these changes in your book, so that you will not have any kind of confusion, etc. Even when you are having like any query, like say whenever you are feeling free, you can just go through the queries which are posted by other students also, so that you will know, okay, this is the answer for this. Maybe suddenly we may not get that doubt, but after reading the question we also may get that doubt. So that's the reason why I created this. Please don't post anything other general about other things and all. So this faculty's book is available. I have this faculty video lecture. I am thinking of selling at 2000 rupees, whether you want. All these stupid things don't post. Make use of it only for IDT. Okay. Then next thing, say this, audit under GST. So audit under GST, statutory audit, section 35 subsection 5 under GST stands omitted. So now we don't have audit. We have only self-certified reconciliation statement, GSTR 9C, And then we can see departmental audit and special audit. There are two types of audit. Departmental audit is section 65 and special audit is section 66. Who will conduct the department audit? Commissioner or any officer authorized to undertake audit will be done, whereas special audit will be by practicing CRCMA nominated by commissioner. When audit is conducted at such frequency based on the turnover that is yet to be notified. And special audit, if during scrutiny, inquiry or investigation it is found that value is not correctly declared or ITC irregularly availed. So special audit is only in case of value and ITC discrepancy. And what is the time period for completing the audit? Departmental audit 3 months plus 6 months. So therefore 3 months, it can be extended for a further period of 6 months by the commissioner. And in case of departmental audit, to whom the audit report will be submitted? It will be submitted both to the registered person as well as to the commissioner within 30 days of conclusion of audit. So therefore, what are all the audit objections which are raised by the officer will be known prior, so that we can voluntarily pay the tax. Thereby we can avoid the penalty, because in case of 73, before show cause notice if you pay, there won't be any penalty. In case of 74, before show cause notice if you pay, just 15% of the penalty you need to pay. For that reason only, the audit report will be made available to the registered person. And who will bear the expenses for the audit? It will be borne by the department. And next, what is the scope of audit? Will they audit all the accounts and records? Yes. In case of department audit, so there is nothing like, they will audit only GST related records. Everything they can audit. Audit of all books of accounts and records maintained or to be maintained during the audit period. And notice for audit, yes, a 15 working days prior notice will be given. In customs it will be 15 days notice. Here it is 15 working days prior notice will be given prior to commencement of the audit. And whereas access to business premise also one 15 days is there, that is 15 days, not 15 working days. If you see offences and penalties chapter, offences, penalties, search and seizure, there I told you access to business premises section 71. In that access to business premises section 71, so whenever they wanted to ask like come and verify the records, they can verify, but that is 15 days. 15 days, whenever they demand within 15 days we need to give, but here it is not 15 days, it is 15 working days prior notice to be given before commencement of audit. And what if audit is already complete under any other law? So under this law also they can create the audit, means income tax audit is done, so can GST audit also be happening? Yes. And next we have special audit. So special audit will not be conducted by CRCMA selected by the registered person, but it will be nominated by the commissioner. What is the time period? 90 days plus 90 days. Audit report shall be submitted to jurisdictional ACDC, and there won't be audit report submitted to the registered person. So it is like a surprise that the registered person don't know what are all the audit objections. And who will bear the audit expenses? Department. Scope of audit, they will audit only valuation related things and ITC related things. The scope of audit is very limited. Notice for audit, no notice will be given, but a direction to get audited will be given. What if audit is already completed? So audit under this section also can be made mandatory. Then audit by tax authorities can be conducted for part of a year, which means that, say for example, so I commence the business only in August. August to March is not even a year. So can they conduct the audit for August to March? Yes, for part of the year also they can conduct the audit. Then liability to pay in special cases. So these are some special points with respect to payment of GST. So who is having liability to pay tax? Generally FCM means supplier, RCM means recipient. But these are some special cases where there will be liability on other parties also. For example, in case of transfer of business, so any dues which are there before the date of transfer, both transferor and transferee jointly and severally liable. So I am selling my business to you. So before the date of sale, logically I should bear the liability, but if there is any tax dues before the date of transfer, both transferor and transferee jointly and severally liable for the dues. What if the business is transferred, thereafter there is some GST dues, only transferee will be liable. So that is this liability in case of transfer of business, transferor and transferee jointly and severally liable to pay dues with respect to pre-transfer period. Then liability of agent and principal. So every agent who is making supply on behalf of principal, when agent will be making supply on behalf of principal, if the invoice is raised by the agent in his name, then the agent is acting on behalf of principal. Then in that case, not only agent but also principal jointly and severally liable to pay the dues. Then liability in case of amalgamation or merger of companies. So in case of amalgamation or merger, till the time it is a notified date. There is one notified date, that is a court order date or NCLT order date. Till that order date, they are treated as two separate entities only, even though in principle they got shareholders approval and prima facie they started making the transfers between them. But only when the court order comes, till that day they are not treated as merged entity. They are treated as two separate entities only, and transactions between them attracts GST. So order of amalgamation or merger passed on a date, but effective from earlier date. For GST dues, two companies shall be treated as distinct, not merged till the date of the order. Liability in case of company in liquidation. This is subject to IBC. Subject to IBC. So whenever a company is liquidated, so normally means IBC is not applicable. In that case, one official liquidator will be appointed. That liquidator should notify his appointment within 30 days, and thereafter the commissioner within 3 months, next 3 months, will notify the GST dues, and those GST dues the liquidator should consider as first charge and need to make the payment. Then if a company is a private company, even though it gets liquidated, but the directors are jointly and severally liable. So every director of a private limited company, even if the private limited company is liquidated, jointly and severally liable. Then what about the liability of a directors of a private company during the time when the company is in existence, not liquidated? Even then, if the company has not paid the GST dues, the GST dues can be recovered from the director of the company. Sir, but company is a limited liability na sir? Yes, for shareholder only limited liability, not for the director. So for director there is unlimited liability. Okay, so that is this. If a company is a private company, all directors shall remain liable jointly and severally. So just like that, when someone is telling you become the director of my company, be careful. Unless you know them, don't become director of their company. Okay, then however, if a private company is converted to public company, then director shall not be liable. Okay, then next. Why? Because in case of public limited company, this provision is not applicable. In case of public limited company, that liquidation process or IBC only will come. Then what is the liability in case of partners of a firm? So firm and partners are jointly and severally liable. If a firm has not paid the GST dues, the partners has to pay the dues. And what about retiring partner? Retiring partner is liable to pay dues till the date of his retirement, provided he gives a notice of his retirement within 1 month from the date of his retirement. If he is not giving the notice of his retirement within 1 month from the date of his retirement, then till the date he is giving the notice of his retirement, he need to pay the dues. So retiring partner will continue to be liable till he gives his notice of retirement to the commissioner, if such notice is not issued within 1 month from the date of the retirement. Okay, then next, section 91, liability of guardians or trustees. So guardians or trustees will be appointed for the purpose of a minor or incapacitated person or a trust. So therefore they are liable to pay the dues, but generally contract with minor is void. So therefore GST liability shall not arise. Like that we cannot say, as if minor is doing business becoming major, or as if incapacitated person is doing business as capacitated person. What are all the liabilities, including the prosecution liability, that is imprisonment liability, will be served upon by the guardian or by the trustee, etc. For example, there is a minor. In the name of the minor, the guardian is taking care of the business, and there is some GST fraud, and the GST fraud is more than 2 crores. Then in that case, can the guardian be imprisoned? Yes, of course. Minor cannot be imprisoned, so guardian will be imprisoned. That is this point. So guardians, trustee of a minor or incapacitated person, liable for dues as if minor was major and conducting business himself, or incapacitated person was capacitated and conducting business himself. This is as good as in Motor Vehicle Act. So whenever a minor is driving a vehicle and he hits any other person, then his parents will be arrested and imprisoned. So that logic only. Okay. Next, liability of court of wards. In case of court of wards will be coming into picture whenever there is no guardian for a minor. So there is a minor and he is having lot of estate, means lot of wealth, but there is no guardian for that person, and the court only will appoint one person to look after his assets. So that person will be called as official trustee or administrator general. So that, or any manager, that person is liable to pay the dues. So this 91 and 92 are connected. Then 93, death of a person. What is the liability of legal representatives? Whether the legal representatives inherited any wealth. Yes. Whether they continue the business or they are not continuing the business, you need to check. Suppose if they are continuing the business, whatever may be the wealth that they have inherited, irrespective of that, they need to pay the GST dues. Suppose if they have not continued the business, then to the extent of the wealth they have inherited, to that extent they need to pay the GST dues. Say for example, GST dues of the father is 1.5 crores and the wealth that is inherited is only 1 crore. Now if they continue the business, they have to pay entire 1.5 crores. If they are not continuing the business, they need to pay only 1 crore to the extent of estate inherited by them. Then HUF, business discontinued, that we have seen. HUF or AOP, partition of assets among the members. Each member will be jointly and severally liable even if after the partition. So say for example, 4 brothers started a business together and they created a HUF, and now the HUF got dissolved and partition happened. Even then, so before the date of partition, whatever is the dues, all the brothers are jointly and severally liable. Same is applicable in case of partnership firm being dissolved. So then also all the partners are jointly and severally liable. And termination of guardianship and trust, even after termination of guardianship and trust, before the date of termination, if there is any dues, the guardian and the trustee is liable to pay those dues. Then section 94, liability in other cases, partnership firm, HUF or AOP, business discontinued. Can the assessment be still completed? Yes. And partnership firm, HUF or AOP, change in constitution, partners or members will remain liable. For example, there is a newly admitted partner. When the newly admitted partner is there, so before the date of his admission, there is some GST dues. Whether the newly admitted partner is also liable for those dues? Yes. So because jointly and severally, change in constitution, partnership firm, HUF or AOP dissolved. So still the partners or members will remain liable jointly and severally. So these are the points, mostly somewhere in MCQs, case scenario MCQ, somewhere like one MCQ they may ask on this, but otherwise there won't be any separate question on this. So this is about assessment and audit.